Hello and welcome, dear traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is February 1 and we're starting from GBP USD pair with Jakub Novak. But first, let's have a look on 5-minute chart for analyzing yesterday's transactions. Pound tested 1.2330 just when the MACD line was just starting to move down below zero, which was a pretty good reason to sell. However, the movement was only 25 pips. No other signals appeared for the rest of the day. Data on M4 money supply and approved mortgage applications did not affect pound much. Meanwhile, the weak US consumer confidence report weakened demand for dollar, prompting a rise in pound-dollar pair during the US session. The UK manufacturing activity index is expected today, but it's unlikely to result in a major market change even if the indicator is slightly down. This is because much more important event is the Fed meeting in the afternoon, where interest rates could be raised by 0.25%. That scenario will weaken dollar demand and cause a sharp rise in euro, especially since other data relating to employment and manufacturing activity will be of little interest. Dovish stance of the Fed will also return risk appetite. For long positions, you can buy pound when the quote reaches 1.2329 and take profit at the price of 1.2358. Growth will be possible only if the Fed takes a dovish stance on monetary policy. However, make sure that when buying, the MACD line is above zero or is starting to rise from it. Pound can also be bought at 1.2303, but the MACD line should be in the oversold area, as only by that will the market reverse to 1.2329 and 1.2358. For short positions, sell pound when the quote reaches 1.2303. and take profit at the price of 1.2271. Pressure will return a very hawkish stance of the Fed and weak position of the Bank of England regarding monetary policy. However, when selling, make sure that MACD line is below zero or is starting to move down from it. Pound can also be sold at 1.2329, but the MACD line should be in the overbought area, as only by that will the market reverse to 1.2303 and 1.2271. We've got a potential price movement for gold presented by Arif Makmur. On the 4-hour chart, it can be seen that this commodity asset is being held back by the resistance level at 1930.52, so that in the near future it has the potential to depreciate to the level of 1900.38, where this has also been confirmed by the MA10, which is below the MA20, plus price movements inside the channel which go down indicated that the sellers were dominating the previous buyers. However, please pay attention if on the way down this commodity asset suddenly reverses up and breaks the level of 1934, then it's very likely that the downward scenario described earlier will cancel itself. Another trading tip for gold is presented by Dimitrios Tsapos. Let's have a look. Early in the European session, gold is trading around 1926, maintaining a positive tone according to the 4-hour chart. Yesterday, gold rebounded in confidence when it reached the psychological level of around 1900. This level coincides with the 21 SMA on daily charts. As long as it trades above the 21 SMA in the daily chart, there's a strong probability that it will continue to rise and the price could reach the area of 1960, heading towards $2,000. US Treasury bond yields fell from their recent highs, thus providing gold with an advantage. If this downward trend continues in the next few hours, gold could reach levels of 1950 and up to the weekly resistance of 1966. During the American session, the US Central Bank will publish the interest rate decision. It is expected that there will be an increase of 0.25%, thus minimizing the chances of a serious recession. According to the 4-hour chart, the gold pair is expected to make a strong technical bounce around the support area of 1920. This area could offer an opportunity to buy, with targets at 7-8 Murray located at 1937. Additionally, a sharp break of this level could accelerate the bullish movement and the price could reach 1949 and could even go towards the weekly resistance of 1965. On the other hand, in case there's a sharp break below the key support of 1920 and consolidation below level of 1915, there's a strong probability that gold could fall towards the psychological level of 1900 and could even hit 6-8 Murray at 1875. At the end, Laurie Bailey with USD JPY forecast. The Japanese yen is waiting for today's Federal Reserve meeting with more patience than other currencies. On the daily chart, the price is moving strictly sideways along one of the price channel lines for the 6th day. The nearest resistance is the MACD line. The nearest support is 127.27, which is the bottom line of the price channel. The signal line of the Marlin oscillator is consolidating under the upper line of its own descending channel. This consolidation increases the probability of a breakthrough of this channel to the upper limit of the rising channel of Tokyo's color. Accordingly, the main scenario is that the price will increase with an attack on the MACD line, blue line on graphic. Crossing the line will open the second target, 133.77. On the 4-hour chart, the price develops above the MACD indicator line, blue line on graphic. The Marlin oscillator is moving sideways almost along the zero neutral line. Waiting for the Fed's monetary policy decision and the Japanese currency's reaction to it. That's all for today. See you next time. Good luck.